So ladies and gentlemen, with that, we move ahead to the next panel discussion. Let's get ready to welcome our next set of speakers for yet another PropTech session that is on investing in PropTech, opportunities and pitfalls. Wow, this is going to be interesting. First up, for our session chair, somebody with 10 years of experience in real estate consulting to leading real estate brands across India, somebody who has handled more than 280 project launches and has helped brands optimize their media costs. We're talking about the co-founder and managing director, Insomniacs, Govind Rai. Thank you, Govind, for joining us. Next up, we're talking about somebody who's responsible for the new wave of PropTech, having raised one of the biggest seed rounds in India and the biggest and fastest seed Series A round of $14 million in Indian PropTech for his direct-to-consumer PropTech startup, Blox. Ladies and gentlemen, we're talking about the founder and CEO of Blox, Aditya Jhaveri. Aditya, welcomed with a lot of applause and hoots from the team. Next up, the founder and the managing partner at Mount K Capital and the head of fundraising Rustom G Group, somebody who has over 14 years of experience in the real estate, finance and development fund management industry. We're talking about Binitha, Dalal. Warm welcome. Next up, an industry veteran with 20 years of experience in all facets of real estate, like construction, investment, management, and banking, came up with the concept of transforming the real estate asset management market by providing knowledge, good governance, tech-enabled solutions. We're talking about the founder and CEO of Integrow Asset Management, Ramashrya Yadav. Next up, somebody who's focused on VC investments in the real estate-enabled and clean tech businesses as a part of the founding team at Max Ventures and has over 20 years of experience. We're talking about the former CEO of Max Asset Services, Max Estates. We're talking about Rohit Rajput. And yes, somebody who's been instrumental in building various tech and product platforms for the company, rich experience spanning more than 18 years with some of the world's largest companies like Intel, Nokia, and Accenture. Co-founded 3 companies in his previous entrepreneurial stint. We're talking about the co-founder and CTO Square Yards, Vivek Agarwal. Over to our moderator to take it forth.
So guys, one thing, let me just introduce my panelists, not the way she did. Today, we have 2 founders of startups. We have Aditya on my left, and extreme left, I have Vivek from Square Yards. And then we have Rohit and Binitha, who are representing the investors. And then we have Ram, who are somewhere, who's treading the line, somewhere in between. His company, Integrow, has been invested by PropTech, and he sits at the managing board of directors of PropTech as well. And now they're actively looking at investing in startups. So thanks a lot, Realty Plus team, for giving me a very, very balanced panelist, right? 2 people on one side, 2 people on the other side, and 1 person on both the sides. So let me get started. The first question, Aditya, I will come to you. This is the round which I call as opportunities. In Blox, so far in your journey, the journey that you have taken is onto the transaction side. A lot of companies in this space have been treading this path. How do you think you're differentiating yourself? What are the opportunities you're finding in this space? And all these companies that I'm talking about, a lot of them have been traditional, but they have been leveraging technology as well. So what is the differentiator that you are working upon? Where do you see the opportunities for yourself?
Hello. Yeah. So thanks for that, Govind. And I think we are highly differentiated in the sense that we are the first platform to create multi-stakeholder usability on a single transaction basis. So what that means is, borrowing from other industries, when you order from Swiggy or from Zepto or anything like that, you need all the stakeholders on one transaction to be connected. So you need the restaurant to get their notification, you need the delivery partner, you need the intermediary, you need that entire system of finance or transaction management where the money can be sent and the order can be delivered. Over and above that, you need grievance redressal. So if, for example, on a 50 rupee price point, you make, you order Coke and you get Diet Coke, the grievance redressal with automation, chatbots, telecalling, call centers, so on and so forth is so high-end. Now, it just stands to reason that if that kind of service exists for the Indian consumer at a 50, 100 rupee price point, would it not exist at a 1 crore rupee price point? And when COVID hit, that market gap became very apparent because, even in other emerging markets, which are much smaller markets, you had, like in Latin America, you have, for example, Loft, Quinto Andar, and, even in UAE, you have like Haspi, you have Property Guru. Now, the core real estate market for all of them is much smaller than even Bombay. Forget India. India is a giant, right, compared to like Brazil or Colombia or any of these countries. But those companies are much, much, much bigger simply because they have a much larger scalability. They touch many more users, whether it's consumers, whether it's developers, whether it's brokers. So building the all platform or the unified platform where when one transaction happens, a person books a site visit, the developer gets notified. If there is a broker in the transaction, they are part of it. High-end artificial intelligence deployment and R&D culture where, it's product first, development first, customer obsession. That's something that we've managed to bring into real estate, and that also, reflects in our the fundraising notes that were mentioned earlier. So it's revolutionary in that sense, and where all the other PropTech platforms stop is where Blox begins, which is search and discovery. So a lot of platforms have done search and discovery, but they have paltry revenues after 10 years of existence. And the reason that's the case is because they can only monetize this by ads or selling leads. They are not able to do the transaction, so they're not able to earn large-scale brokerage revenue. Hence, they are not able to scale further. So, yeah, that's just
Thanks a ton, Aditya. And I have a lot of questions that I'll be coming back to. But for now, the next person I'm going to ask the question to is Binitha. So for those who do not know Binitha, she's a synonym to fundraise. And just now they have announced the fund is being led by Binitha with Credai and Let's Venture team, where they have dedicated $100 million fund that they are raising to invest into PropTech space. So, Binitha, my question to you is, what is this initiative for? What are you trying to do with it? One, in terms of the ecosystem, are you trying to create a possibility where these startups are going to leverage the Credai network as well? Most importantly, if the startups can expect more than money, what is it that is coming beyond money with this association? Because VCs can come, but Credai coming in together brings in some other value chains as well. So what can these startups expect from this platform?
Thanks, Govind, for the well-thought-of question and for all the questions that you worked on. You're very, very humble in all that you do, and it's great to see you where you are today. Good afternoon, everyone. Just to add to what Govind said, the Venture Catalyst and Credai partnership, which has been announced a couple of months back, is to build what we all see is PropTech today. I think this is one of the first in-person PropTech, I would say, conference being run by a real estate magazine. I'm not seeing, or I have not seen PropTech really take its prominence till now. And it's great to see the, I would say, the awareness that people are looking at PropTech with today. And like you said, ecosystem, marketplace, money. I think what's great for India today is money is there. I don't think there is a problem of money. The problem exists of the right solution and the right consumer to that solution. What we're trying to do with this PropTech fund with Credai and VCATS, which VCATS is going to be leading, we are co-leading with them, is we are providing a umbrella of solutions under one roof. Where else will you find a VC? with an entire ecosystem of 13,000 developer members across the country. I mean, if you have a solution, we're more than happy to mentor you. We're more than happy to develop it for you, with you, and also give you a testing board. Most of the startups today don't have that reach in terms of mentorship, in terms of testing board, in terms of ability to pitch their idea stage solutions as well as their solutions before they hit the market. This is what that platform is going to give to the world. I think it's a very unique one that we created with Venture Catalyst, and it is unique globally. If you look at funds, VCs across the world, there has never been a partnership of the real estate sector with a VC fund. But this is what we are kind of going to be doing with them. And I think it's the best way to work with competition is to come up with your differentiator. And this is how we plan on doing it.
Super, Binitha. Thanks a lot. And best of luck for this initiative. And all the startup founders who are here and you're looking to raise money, you know where to go to. Yeah. So I know that. That's my job. Yeah. So next, I will come to Ram. So I'm going to take the startup side of you first, right? At Integrow, you have been about last mile funding for the real estate projects. Now, last mile funding in last few years has taken up in a big way. There have been many companies which have been into this space. My question to you is, what are the opportunity areas that you witness in this space for tomorrow? And how are you leveraging technology? Where is the scope of technology as an opportunity that lies into the space that you're currently operating, just as an Integrow for now?
Yes, it's...
Yeah, it is also.
Okay. So it's not just the last mile funding. That's the first one. What we are trying to do, and because the question is more around differentiation, if you see most of the alternative funds are basically an offshoot of a large wealth platform or a banking platform. For real estate specifically, there is no single specific platform which only focuses on the needs of real estate developers, real estate properties, and different possibilities around right up to REIT, right? What we are trying to do is we are trying to create and play in that space where we are only focusing on real estate. We already have one fund in place, which is the last mile funding. Two more in pipeline, which one of them is a co-living, another is a commercial office space, leased again, and there are many more in line. So basic idea is that we want to stay only focused to real estate and different product lines in that, as far as investing in the industry is concerned. How we are integrating technology in this. If you look at the Aurum PropTech play, it's basically an integration of services, technology, and capital. So if you take a very simple example of one of our investee companies, Hello World, managing close to about 16,000 beds across the country. If we do a co-living fund where they are kind of Marriotts of co-living, we own those properties in the fund, which can go later on to the REITs.
Okay.
That's one single integration.
So those properties are also owned by you?
Then they are owned by us.
Lovely.
Right.
Okay.
So that's a very simple example. Second example I'll give you, which is the last mile funding. Today, when you fund a developer, the problem is the trust is not established. And I have been funding real estate for last 7-8 years. I have been a developer myself. You know, there are a lot of opacities. You project the cells, you don't meet the numbers. You give a certificate of an architect, you don't know how much to trust as an institution. All that we are doing there is, let's say, for example, one of the investing companies, Sell.do, which is one of India's largest sales CRM companies. Now, if the developer has that, then we have absolute control of what really is happening there. And that helps our investors' confidence and trust. So we are doing the integration of that kind. So that's to explain you what we are doing at Integrow. And of course, PropTech will talk later.
Sure. I'll keep coming back with questions. So, Mr. Rohit, I'll come to you next. So, guys, I was scanning through his Twitter profile, and I realized that, you know, he's a finance guy and who's very, very bullish on the clean tech, specifically climate tech. My question to you is, since most of the startups here, the two startups that we have, they're in transaction space. So you sit in a unique position from an investor point of view. This whole sustainability play, the clean tech play, this segment has seen a lot of results and growth and awareness in the last few years. Where do you see this momentum going forward? Do you think that there's an inflection point that has come where investors can see that, yeah, the time has come where these companies will be able to monetize themselves very fast? How this segment is really growing, if you could just put some light in terms of the opportunity areas specifically in this space.
So on the sustainability bit specifically, right? Okay. So there's a very interesting book I read a few years ago. And I'm in Mumbai as I say this, and the title of the book is The Water Will Come. Okay. A friend of mine who used to run a venture capital platform wrote an article today, just sent it to me about, you're by the coast, you have all these buildings, do the math, 10, 20, 30, 40 years from now, what's going to happen to those assets? Yeah. So the nature of these things is that these events don't seem relevant till they're relevant one fine day, yeah. Right? You have these little micro bursts. You have these early warning signatures, signs, markers. Yeah. We had that with the pandemic, and then suddenly one day, it became quite real for all of us. So I think you've got to look at the large macro trend. You need to have very patient capital. And you really look at what's happening in the world around us. What are some of those signs we're seeing? How are you going to mitigate some of the risks? How will you adapt? Because you're not going to be able to take away all the risks in the short term. And I think the right kind of capital will flow. Will that capital be always venture capital? No. Some will be venture capital, some will be developmental funds, some will be impact funds, some will be government grants. That's more on the climate tech piece. I think on the prop tech piece, again, as I was sharing, I've been tracking this space since 2016 across multiple geographies. It had an amazing amount of enthusiasm from non-strategic investors. And then guess what they figured out? You don't scale to 100x in 2 years in prop tech.
Our heart is broken.
Not everyone does. Some guys do. And it's a slog. You're going to get there year on year, compound the value, build a fabulous business. But only a few outliers will get in that 100x, and that takes away the froth, right? So everyone who's thought it's the next big thing. And then what remains are strategics, like the initiative with Kedia, the kind of fund that, for example, Vipul runs with HDFC. And strategics understand the industry. They understand how to create an ecosystem, how to get the network effects going. So I think that's the way I see PropTech playing out.
Lovely. Thanks a lot, Rohit. Now, Vivek, I'll come to you. So, Vivek, you represent the technology side of the narrative of Square Yards. And personally, let me tell you that I'm a little biased because I've seen the technology, what they are building. And after witnessing it, I can tell that, definitely Square Yards as a company is minimum 2 to 3 years ahead of, in a conservative way, of the whole landscape, right? So my question is not about what you guys are already built or showcased. My question is the opportunity areas in technology that you believe that Square Yards doesn't have right now as well. And those areas where you can fix those problems with the help of collaboration or developing it yourself, where you believe you can improve your efficiency or maybe put your unit economics onto the positive side. What are those technological play which you believe are the opportunities area for Square Yards?
Yeah, so Govind, so since you asked this question specifically from a transaction point of view, so see in the transaction space, there are two opportunities that we see which we haven't cracked yet and which are very large. So one is, as Aditya was also mentioning, if you look at any other industry, be it fashion, be it retail, be it anyone, everyone has digitized the inventory, right? So they are proper SKUs, they are proper pricing. People go onto the website, they click on a product, they get the pricing, they get it home delivered. But when you see in real estate, especially in primary, no one has been able to digitize the developer inventory. which is unsold. And part of the reason is because the developers, they don't want to declare how much inventory they have and how much is unsold. But with the advent of RERA, now they have to declare it every quarter, right? So there is a huge opportunity which lies, which can make real estate a parallel to e-commerce, right? Where some player, whether it be us or someone else, would come and digitize this whole inventory and make it e-commerce like, right? So it will be like a book my show or a airline ticket booking. So that's one opportunity that we see. The second opportunity that we see is on the resale space, right? So there are a lot of startups who are solving the buyer problem, like almost all the startups are solving the buyer problem, right? There's no one who is solving the seller's problem, right? If you want to sell your home, there is no one, right? You will be asked to put listing on a platform and then you are connected to different agents and you are on your own. So I believe that if you look at the resale market, it's almost like 2.5 to 3 times of the primary market. Sure. So there is an opportunity where someone can organize this space, which is largely run by independent brokers, small brokers, but they don't have the scale or the technology to support it. So that is a problem waiting to be solved, where someone can create probably a deal room kind of environment where Aditya was also mentioning, like there are multiple players. There might be a seller's agent, there might be a buyer's agent, there is a mortgage guy, there is a title insurance guy, right? Title check guy. So all these guys come together and help the resale transaction run better, right?
Absolutely.
So these are the two spaces that we see which are still white spaces, open.
Lovely. So the second thing that you mentioned, where I believe that Home Exchange and Zapkey are two companies which are trying to fix this. Somewhere they've got a good start, and I'm looking forward to a collaboration maybe for for them with you. So yeah, now guys, I'm coming to the second part of this round, which is something that I was looking forward to. There's a question है जो हमेशा जो startups investors से जब interact करते हैं तो उनको सबसे ज़्यादा आता है, and at the same time startups when they are operating. They in this space, unko malum hai, without an ecosystem, nothing is possible. So the first part that I'm going to ask is with Vivek, Ram, and Aditya. First part of this question, which I label as ecosystem play. Blox acquired Flintstone. Integrow with Realty PropTech and the series of 11 companies which Seldu or Beyond Wall or Housemonk. There's an ecosystem coming in. For Square Yards, there's PropAMC, PropVR, and Azuro, and I believe many more on the way. There's an ecosystem that you guys are trying to build. My question to you is, how important is this ecosystem play? मैंने एक idea लिया, उस पे काम शुरू किया, और मैं execute कर रहा हूँ. That's the best way to go for it at times. That is what the investors tell to the startups, right? Be simple, be straight, simple solutions ढूंढो. But then here there are 3 startups I'm witnessing. Why are they making an ecosystem? And if you're making an ecosystem, how are you leveraging this ecosystem? Is it helping you do better, efficient manner? It is helping you improve your profitability? What is the real reason? So Ram, I'll start with you first on this one, since you showcase a little bit of the investor side of the narrative as well here.
Yeah. Our goal mostly is very simple. So paneer masala mein aajkal paneer hi nahi hai. So what we basically are doing is just trying to find that paneer. So most of the startup you speak to, scale, agility, technology, सब आता है. अगर कुछ नहीं है तो वो unit economics or profitability. And there is no sense of when will it come.
Sure.
So what we are trying to do is we are trying to solve this paneer problem 2 ways. One is try and strategically bring different solutions and then leverage it for the other one, right? So if you see a Sell.do, Integrow integration, Sell.do to Beyond Walls integration, Beyond Walls to Hello World to Housemonk. So somehow some part of paneer will keep coming to everyone. Okay. We realize that if we become more like VCs, then we will also go and chase the same ghost of scale, and only to realize that at some point of time the water will stop. It won't come, and that's exactly what has happened. I mean, in India today, morning I was reading one of the posts which says 115 unicorns in India.
Yeah.
The real question to ask would have been how many of them are making the profit? Because the real sustainability is not valuation.
Right.
It is, would you really make the money? And that money you will only make when the customer becomes dependent on you.
Absolutely.
Google doesn't make money because it's a great solution. It is making money because now you are dependent on that.
True.
So we realized that having one product, one solution is not going to help. So rather create an ecosystem. And we are the first and the only PropTech ecosystem which is listed on the stock exchange. So it is all for to see. Yeah. With a serious money, which we were talking offline, with a serious money, 600 crores in the account. And then we are backing the sector. So we are certainly here for long, and that's what we are trying to do.
Superb, superb. Lovely. And I'm watching for the ecosystem that you guys are building. Aditya, over to you. Flintstone narrative definitely showcased that you guys are here for a reason, right? Definitely the market took notice of that transaction. Why the move though? And are you yourself trying to put yourself forward to create an ecosystem of your own?
Absolutely. So we are absolutely trying to create a massive ecosystem, and Flintstone is like a first of many, if you can think about it that way. So Vivek mentioned earlier when he was describing the primary marketplace towards the first part of his question, that is the massive unsolved opportunity. So that's the opportunity that we are addressing head on. So what we are trying to do, and why we have VC interest like blue chip, it's not always about the quantum of capital. Warren Buffett said something about investment 40, 50 years ago, which still holds as true today as it did then, which is price is what you pay and value is what you get. So when we raised our seed round, we had nothing, like just a deck and a concept, and we said that this is the disruption that is possible. And we had like 14 investors jump on, where we had to reduce allocations so that we could actually do the round without diluting too much. Now, why does that happen is because, as we've identified, we know that you have a Zillow in America, you have a Purple Bricks in the UK. Why do you not have an entire marketplace with seamless transaction integration? You book your site visit, you do your virtual visits, you go, you see it. What happens is we are trying to create unparalleled, obsessive consumer focus here. Now, as a consequence, obviously all the developers get the digitization. So you cannot create a two-sided marketplace without fixing supply. Now, the reason we are only in primary is because that is the most accurate data that can be that can exist, right? So we have 1,200, 1,300 projects now on our platform which are live across like 800 developers. But to the point of that someone mentioned about like PropTech can't scale, and to directly address your Flintstone question, when we acquired Flintstone, it was April 2022. In March 2022, Blox was a, say, 35-40% company. We were able to do maybe 15-20 transactions a month. On a gross basis now, in March, we'll probably do 400 to 500 transactions a month, which would be, if not number one, number two, if not number two, number three, in Mumbai city. So we're not talking about a tier 2, tier 3 city. We are going head on into the biggest real estate market in India. Flintstone gave us the ability to scale manpower and feet on street with specialist sales managers. So our journey from 35 to 70 and 70 to 165 in that 2 months happened then. Today we are a 400-person company, and in operational terms, we've been able to scale effectively 25x in 12 months. In operational terms, not in revenue terms, because the big problem of this industry is corporate governance and misreporting, so we don't want to do that. We want to say on a gross basis, we can do 500 transactions. Yeah, 10, 15% may cancel. They may not have paid 10% as per ERA, so we can't recognize that revenue. But we are able to effectuate 500 transactions a month within 12 months of beginning sales, from 35 to 400 people within 12 months. So, the notion that exists that PropTech can't scale at that speed, comes back to the Warren Buffett quote, if you really build value, money is going to pour in. We raised our $12 million Series A in December. In what, when they interviewed me on CNBC, they were like, oh, in the heart of the funding winter and all that. We faced no funding winter. We have blue chip capital, 17, 18 global major funds. We have no Indian investor except Kunal Shah, which is, a mark of personal respect to him that we've taken him on board. But these are like funds who are participating in like Snowflake IPOs, and these are funds who are participating in like massive checks in Latin America. And they are betting on us to create that ecosystem in India, which brings e-commerce transaction ability and provides e-commerce ability to the final consumer and the developer, so that as India scales, we are able to create excellent or the world's best customer experience is our mission.
So lovely, Aditya. I believe, the way you explain and the growth trajectory that you have talked about, I'm wishing you all the luck, and I'm looking forward to a great competition and the fight tomorrow for all the guys in the transaction space, and that will make the whole things healthy.
Sorry to interrupt you. I forgot one thing because, Ram mentioned something about unit economics. We are 35% contribution margin positive. So we are today, not on an EBITDA basis because we attract some of the best talent in the world, but short of a EBITDA basis, on a contribution margin unit economics basis, we are 35% profitable on this stack. So it's very important to know that can happen, not for us, but to propel the whole industry forward,
Super, that's pretty inspiring, because these kind of numbers in this space are the things the investors read. They don't see these numbers usually. 35% EBITDA positive is everything that investor would look forward to with a growth scale year on year. So now, Vivek, coming to you, the ecosystem that you are creating, how are you leveraging it? One company inside, how it is benefiting from the other company, and overall the mission that you guys are chasing at Square Yards.
Yeah, so we started as a primary market company. Still 70% of our revenue comes from there, so that's the bread and butter. But as we move forward, we experienced, we looked at the consumer journey. So a consumer first searches real estate online, right? Then he buys it. Then he's going to get a home loan. Then probably he's going to get an interior done. So we picked one vertical by one vertical, right? So we started with mortgage. Now we are one of the largest players in mortgage. We started interior company like 2 years back. We are now the third after lift space and home lane. So how it is helping us, before answering that, I'll answer how it's helping consumers, because consumers gets a one-stop shop, right? So if any customer comes to us through either of these channels, they have got a one point of contact to do all of this together. Even for, we acquired Azuro for rentals and property management. We acquired 2 companies in B2B space, Prop VR and Prop CMC, right? So how it has helped us is that our cost of customer acquisition has drastically gone down. Like if I have to compete with a lift space or a home loan in interior, right? These guys had to do marketing, but I have customers already with me to whom I have to pitch another service, right?
Do you mind explaining what will be the differential of the CACs usually for a lift space home lane? Just a reference figure for our audience to understand. Customer acquisition cost mein difference kya aata hai typically because of this ecosystem play?
For them, cost of converted customer, I am assuming, would be close to, I think, anywhere between 80,000 to a lakh rupees, right?
Okay.
So how much leads they spend, how much marketing they do, and how much conversion actually happens, right? Their ASPs are close to around 3 to 4 lakh rupees, right?
Yeah.
So that's why these companies are still not profitable, right?
Yeah.
For us, the same cost of customer acquisition is probably less than 10,000 because we already have that customer already acquired, right? So, that's a kind of ecosystem we are trying to create and remain profitable within this ecosystem.
Get that. Thanks a ton, Vivek. Now, I will come to the other side of the narrative. मैंने शुरुआत में आपको कहा था कि आप ecosystem समझ गए अभी startups के साथ. Now let's ask the investors. This is the exact thing they will say no to. Am I right or am I wrong? Because once you'll go to them, they will say, यार बहुत complex है, यार ये एक साथ इतनी सारी चीज़ों आप कैसे करोगे? But there are people solving the transaction problem. There is Ram sitting in between who is looking at the ecosystem in a much larger manner where the finance element, everything is coming in as well. So over to you, the investors, to Rohit and Binitha. My question to you is, typically when you come across these challenges, whenever anybody in the PropTech ecosystem will look at positive unit economics, they will have to, one way or the other, operate into the ecosystem play. But these are the exact fundamentals which, based on my little bit of understanding of the VC engagements, they say, no, boss, you're not focused. So how are you addressing this issue? Are you prepared for it mentally when you are entering in this space or you're investing in this space? Or you are also those who are choosing, नहीं यार, simple चीज़ करोगे, हम पैसा डालेंगे, वरना तो यार तुम देखते रहो, हमें EBITDA positive करके दिखाओ, then we will come. So how is your take? As startups, we really want to know, how do you guys go about it? So Binitha, over to you.
I think let Rohit go first.
Yeah, you're playing it safe. No, she'll come back with a fire answer, I'm aware. Yeah.
While you were discussing the panel composition, what you forgot to mention is the seating arrangement is also gladiatorial.
Yeah, absolutely.
I wish I had the answer to that, right? I've built businesses for as long as I've been investing in them. And if I can say for the most, it's very situational. For the most part, I love the adage focus on focus. Yeah. And then you get to a point where you get to see these adjacencies, right? When you start making money, you got a very sharp view on the customer, right? Like Vivek and Tanuj will say, "Yaar, ye to hum kar hi rahe hain. This thing we're nailing it." But then this guy is taking one more step and going to someone else. And what's my incremental cost of now serving him versus the incremental revenue I'm getting? So when you start, in most situations, not all, when you start to focus on focus, you start to discover profitable adjacencies, right? And those are great for firms to follow because sometimes you go deep and sometimes you follow the trail or you follow the smell of money. Having said that, in real estate ecosystems or PropTech ecosystems have a great multiplier effect, right? Not only just PropTech, even if you look at the growth of the IT offshoring industry, I was listening to, wow, time's up, but listening to Sanjeev Bikhchandani, and he said, look, I understand this talk about VC money, but you've got a very large industry, the IT BPO industry, which grew on customers' money, right? And sort of the point that came from it is that there was a great body called NASSCOM that got created, which got the work of the ecosystem going, because that is advocacy, that is public education. A large part of ecosystem is a non-commercial enterprise, and sometimes it can become a distraction. Sometimes it can be a very good palliative for not facing the hard thing about your business, that look, maybe something is screwed up here. I shouldn't be going here or there, right? Maybe the answer is within. So short answer, sorry.
Yeah, okay. Binitha. We have, this is working a little faster. We have 10 more minutes to the panel.
No, I'm sure as long as you're there, we are not worried about time.
Only thing, Ram has to catch a flight, so I will not
So delay. Then we have to worry about time. Okay. So I'll make it quick. Couple of things. I think everyone puts money to make money. There are no free lunches anywhere. You may have the passion, you may have the panache, you can speak well, you can go all out and you can sell a dream. But if that dream is gas, you will not get anything but gas.
I told you, she's going to come back.
But I think what's important is two things when you look at an idea. Most founders are so irrationally passionate about what they want and what they believe in. Okay? They don't have the ability to even sometimes take feedback. And it's not just feedback about their idea, it's about telling them that let's kind of help you look at things differently so that your idea can make money. Okay? It's not about telling someone if they are wrong, it's about telling them how their wrong can be made a right. So, A, that needs to be looked at when you can't see money in an idea. And two, when we look at investing in startups and when we are like assessing them, I think everything looks brilliant on Excel. Yeah. I think we've seen that across businesses, we've seen across funds, we've seen across visionary funds and passionate funds. But I think what's important is looking at two, founder, the idea, and whether it is going to disrupt/create a market. If you spend enough time and enough money behind an idea which will work towards creating a habit of a market, then you can create an Amazon, because that's what Amazon is. It's burnt money for the last 10, 15 years, but that person went on and he was lucky and people backed him to do it. But if you don't have a founder who can find his way out of all the misery and be open to adapt, that's a disaster. No matter how much money that you put behind them, it's not going to work. And I've seen a lot of founders who halfway through their journey believe that today the sun is bright, tomorrow the moon looks brighter. That is another disaster where no Excel is going to help you. So I think numbers are great, numbers should be there, but ideas have to make money. Ideas can't be gas, otherwise people will keep throwing gas back at you. So that's the two things that's important for us to look at. I mean, I'm not going to go a little technical, but this is how I look at it in a...
All the panelists have already given you a thumbs up, so I'm not going to ask a question back to you on this. So, no, thanks for the perspective that you all added, and I believe all the startup founders who are sitting here, they might have got, what do they have to do? Make sure that you're not selling gas and you have money just around the corner. My next question is the second last part of this round. One of the important part that I was reading, out of the 51 companies who are unicorns, their filings have come, 2 companies have stood out with 100 crore plus profitability. And these 2 companies are also $1 billion revenue companies. I'm talking about companies called Off Business and Infra.Market. Both these companies happen to be from the PropTech ecosystem, right? But the problem is, if you really see the paradox, in the last 1 decade, the kind of money that has come in to the PropTech world, this segment in India, has been nothing in comparison to what has come to EdTech or a fashion tech or e-commerce or any other disruptions that we saw. In the last panel, our panelists talked about that there's money available, right? But why the money is falling short when it comes to PropTech when I compare it with EdTech? There is a problem, and we got to address it. So I'm going to do it from 2 perspectives. From the startup point of view, specifically Aditya and Vivek, I would want you to tell us and the audience your journey of raising money. Because there's something interesting that I know that Square has managed, and हम लोग life में कोशिश करते हैं right swipe करके अपना match ढूंढने का on Tinder. He went ahead and got Tinder founder Justin Martin also. So there's an interesting story. How did that happen? If you guys can start with that, I'm going to come to the other side of the narrative. Why the PropTech money is falling short compared to other sector, right? So Vivek, would you want to start this time?
Yeah. So we started our journey in 2013, right? And if you look at the real estate cycle, 2008 to 13 was a boom period, and then after that, the sector went down, right? Until 2020, till COVID, it was going down. So we were the only positive in a negative industry, right? In the initial few years, we went to VCs, Ps, we did a lot of meetings, right? But nothing materialized. And after a couple of years, we said to hell with it, we'll build it with customer money. That's what Rohit was also talking about. And we started focusing on the business and not the VCs or Ps. So our fundraising journey, there is no institutional investor as such, but we have got great backers who have invested in their individual capacities or through their family offices. And we are on the path of profitability. We are running with our own money, and we spend like it's our own money. We are not into a cash burn game. So that has been our fundraising journey. Hopefully, touch wood, we'll do a IPO very soon. So, so that has been our, like we have not raised an institutional round as of now. The founders still hold the majority stake, so that's good part of it. We are not riding a tiger for growth, right? We can run on our own pace. We can take our own decisions, so that's a good part of it. The bad part of it is obviously sometime between growth and profitability you have to choose one, and it's difficult to balance, right? Especially when you're expanding into different verticals, different markets. So, but so far so good.
Great. So the learning here is, guys, VC money के अलावा भी बहुत से तरीके हैं, and Square has leveraged it. And I'm sure VC के जो normal issues साथ में आते हैं, that is what you are not facing, which is a plus side maybe or maybe not. You know it better. We have a shortage of time in the next 5 minutes. We have to wrap as the lady here has told us. So Aditya, quickly to you, how has been your journey onto the fundraising side? And one important thing, how did you manage Justin Mateen to come on your cap table?
Yeah, absolutely. So basically, as I mentioned earlier, we started with only an idea. So I studied international relations and history at the London School of Economics with no real desire to like go and build a business or something like that at that time. That was 10 years ago. So it was more like a social science problem. When COVID hit, we said there is this massive opportunity. It's untapped. You know, how can it be untapped? Like, how is it possible that people aren't seeing this? So we started speaking to people in the Indian startup ecosystem, the major unicorn founders, and we were like, do you think this is viable? And a lot of them said, yes, it is. But one thing I want to point out here, which I think will be helpful, is that there is a very big mindset difference between foreign capital and Indian capital. And anybody, you know, the simplest way to see this is if you watch Shark Tank India, you know that frankly the questions are only redundant. So the approach is either you are legacy, in which case you are building what you're building at your pace and that's great. Or you're massively disruptive and you're saying I'm going to have 3, 4, 5% share, market share in India in 3 years, in 2 years. When you're doing that, to your question about Justin Mateen, or in that same round, like the media picked up Justin Mateen's name, but we had 13 other investors. We had 14 total investors, 4 or 5 unicorn founders, funds, etc. Their question was never about, oh, tell me your next 12 months projection. Not one of them. Tell me about like, oh, your cash burn. They're like, show me the $5 billion vision. Show me the $10 billion vision. So when you have a quality founder, when you have a quality team, you know, for every investor, it's their own prerogative. I also invest, and you know, I'm one of the earliest investors in Zepto, which in 1 year went from like 7 mil to 900 mil. So it's the fastest growing startup in Indian history. But what happens is, if you ask him, tell me what you did last month and 2 months ago, when you're growing 100% month on month, my answer before it reaches you is redundant. So what I'm trying to say is, if you're pursuing a $5-10 billion vision, you do that, and then you don't worry about like, will I lose 200K doing this? But if you're saying, okay, you know, respectfully, what Vivek mentioned, that we will run it with our own money, we will do it at our pace, and we don't want to ride the tiger, that's your call, and you should build it that way. But to be in between, the man who sits on the fence, you know, I mean, what happens, happens. So to say that at some point I'll pursue growth, at some point I'll pursue profitability, then I'll flip-flop based on what my VCs tell me, that leads to, you know, the debacle that 1 or 2 weeks ago happened with, you know, one of the bigger prop tech companies, which was blown out of the water in 1 year. Because suddenly it's growth, suddenly it's housing finance, suddenly it's profitability, and the startup is over. So, you know, you got to know your journey, you got to know your path, you got to be in sync with your investors, and if all that holds true, you will succeed.
Super.
So sorry, I'll have to cut it now because I have 2 speakers out here who are really looking at
so
me
I'm
and they
just,
have to leave.
Ram, I will ask this question and then we will make
Ram,
sure that...
would you be open to that? Quick one. I know.
Yeah, a quick one, and then we will... okay. So your perspective from the point of view of what they spoke, there were 2 extremes that were presented. He wants to ride on his money and the people who he isn't comfortable with. Here, he's a bullish guy. who's saying that, we are just going all out and doesn't matter, we know what we are doing. And we see money, we're going to leverage it and going to run fast. The question to you is, when the PropTech companies are coming to you, I ask, this space is getting lesser investment, and why is it so? And the second part, what is it that the PropTech guys are not getting it right? When they're coming to you, what is it? It is the pitch, it is the idea, it is the solution. Where is it that they're getting it wrong?
That's an entire summit question. Yeah, go ahead.
So first of all, I hope this is getting recorded.
Of course, it is live streamed.
I'll borrow whatever you said and just play it at my reception for most of the guys coming for investing. You have made my life easier. I think the only question or only answer to why PropTech is still not there in terms of attracting that capital, I think we are at very early stage in India. Yeah. We have just started talking PropTech. Teal is a very new concept here, right? So it will take some time and we'll have to have patience. And I think that's where I agree to him that we have to really see long. That's not how I see. Yeah. We still see the 12 months because if you can't run the patience for 12 months, you can't do it for 12 years. Absolutely. And that's one of the challenges. And that's why I want to borrow from
Binitha.
Her pitch. And please give me the video.
Absolutely.
I'm serious about it.
So Ram, thanks a lot. But bid adieu to you. Will not delay you any further. And the same question, I will pass it on to Rohit and Binitha in the meanwhile. And Rohit, yeah.
Yeah.
Oh, are you leaving right now? Okay.
Yeah, that is the best thing that I could do. So that he doesn't miss the meeting.
Even Rohit has a flight. Okay, Rohit, please go ahead.
Before I head to the airport, I'll just be a little tongue-in-cheek and copy my idol Charlie Munger. I have nothing new to add. And on that note, thank you for having me. Sorry, I've got to rush.
Sure, Rohit. Thanks a lot. So, Binitha, this question coming to you. What is your take on the same thing? Thanks a lot. Done.
What is my
Do we have last 3 minutes now?
We don't have any time.
Binitha.
I can't imagine Govind, someone is saying that to you.
I know that. I'm so heartbroken. You guys have no idea. Okay.
Rohit, we've been quite gracious, but of course we love the fact that he's keeping us all engaged. So kudos to him for that. Let's give him a big round of applause. Please go ahead, Binitha.
But trust me, I've not crossed the 40 minutes limit. I just crossed. Yeah.
Okay, I'm going to keep it short and sweet. I don't think it's a problem of money in PropTech. I think it's a problem of idea, and it's a problem of team, and it's a problem of creating the market. You count the amount of PropTech companies today, and you will not know they are more than what you think exist, but they don't have the reach. Secondly, I think what's important, or if you compare this to fintech or edtech, the check sizes in a fintech and edtech may be much larger. Okay, when you go to very established and structured VCs, you can't go to them with a $1 million, $2 million fundraise round. They all will look at a $20, $50 million individual check. So companies have to mature to that level, after which you will really start seeing Economic Times covering them on the front page. So I don't think it's a problem of money. I definitely don't think it's a problem in terms of a marketplace. I think it's a problem of awareness, and it's a problem of actually bringing this on the forefront. So those are the two things. And I can tell you from the real estate side, from a very unstructured way of working, this sector is becoming a structured way of working. Nobody imagined that you will sell homes online. Everyone sold homes on Zoom during the pandemic. So things that never existed are coming today. Awareness is coming, need of systems, processes, data, artificial intelligence, all of it is coming today. So all that will add a further, I would say, push to creating this as a marketplace. And I think that would be the end of everyone's question.
Yeah. So thanks a lot, Binitha, and I believe you summarized it pretty well. So with that, guys, we have no time left. And we are going to continue with my questions into the meeting room. And thanks a lot, audiences, for joining us. And one round of applause for the panelists that I had today. They've spoken. The leftover panelists, then, yeah. The two are on their way to the airport. So thanks a lot, guys. Thanks a lot, Realty Plus team, for giving us the chance. We'll catch up now into the meeting room. Thank you, guys.
Sure.
And any questions that you have with them, feel free to catch hold of them. If you need money, go to her. If you need ideas and how to execute it and collaborate, go to him.
1 second. The editor, Realty Plus, Sapna Srivastava, we'd request her to join us on stage. Ladies and gentlemen, a big, big round of applause. Of course, just a couple of minutes on the felicitations. First up, thank you so much, Govind, for joining us and curating this excellent discussion. Govind, okay, all right, we'll start with Vivek or Binitha, either or. First, Binitha, thank you so much for being so gracious and sharing your knowledge today. Ladies and gentlemen, a big, big round of applause for Binitha. Thank you, Vivek. Thank you for joining us on this. Okay, Govind first. Thank you, Govind. Thank you. Let's see whom she chooses to give. Aditya. Oh, all right. Alphabetically. And of course, Vivek, thank you so much. And may I request the entire panel along with Sapna to please come together for a group photograph. Apologies, we couldn't have Rohit and Ramashrya in the group photograph. We would have loved that. But of course, ladies and gentlemen, let the applause continue. A great, great panel right there. And thank you so much, Govind, for curating it so wonderfully. Thank you.